Good morning, everyone, and welcome to the European crossover webinar. And we do have some news that will be coming out. Bear with me. We just got market composite. No, that's on this. Okay, let's move on to the 6. There we go. So earlier we did have German industrial loaders, which is about a couple hours ago. They came in at 10.4, but more importantly, at the bottom of the hour, we will have market PMI out of UK, which they're expecting 47, and then at the bottom of the hour, which is an unusual time to have it, but it seems like these times change from time to time or season. But anyway, we do have the Centix and retail sales index coming out of the Eurozone. At the bottom of the hour, we'll have the Centix index at the bottom of the hour, they expect negative 10.9. And at the top of the hour, we will have Eurozone retail sales. And as we roll into the States, we'll have Mexican gross fixed investment and UK mortgage rate. And then at 9:45 Eastern, we will have final market PMI, as well as services. And at 10 a.m. Eastern, we'll have employment trends and ISM. Here in the United States, that'll be manufacturing as well as employment and orders. That may be a bit of a market mover. That'll be at 10 a.m. Eastern. Let's go move this out of the way. And we did have a long weekend, obviously, with here in the States, recognizing July the 4th on the 3rd, which is on Friday. So we're coming back, and we are seeing the euro with a little bit of a bid in here. Actually, all the currencies, even the Aussie dollar, wow, we made it up to 69.80. Holy smokes, actually a little bit higher than even that, probably like 69, almost 90, I guess. And 69.31, we'll show that later, it's been very key. Dalian, relatively quiet. Peso continues to go on and strengthen, although that would be the dollar peso weakening here a bit. Bear with me. And we got some decent volume in here. So those of you that are trading the peso, look at this. See right here, we got a hammer. Let me go in and show you. See, look at the volume. We got a pretty good little volume pop here in the peso right here. You see that? So we've been averaging what, probably like around about 150, 175 contracts. And right now on this little blip in here, we traded 500, just a little over 500 contracts right there on that. Let's take a look at that. All right. There. And then we made one more higher high, but look at how low the volume was. And with that, you can see here, you can see this on the peso. And then, let's move over here to 5. Well, that just meant my screen number. And you see the peso? We just put in a little hammer bottom. Well, that was pretty significant if you look at this. So if we were making this low in here, the volume really kicked up, and then we made the low right before we went down there. We made one more low on very relatively low volume after a spike, and you can see the market coming back up here. For those of you that maybe trade the peso. Dollar index is pressing lower at this point. We've been broken by 97. And we were looking for a little bit lower move, or we are looking for a lower move here in the dollar. So it's on the crest of rolling over. And I'm just looking to see UK new car registrations are down 34.9%. See how the cable's doing. We're still up in here, up here. I was going to see if we got any we get the morning bid called the morning bid that hasn't come out yet. We do have a little bit of news, but just on FX, one story, and that's it. Usually, we like to focus a little bit as we start the week out. We are seeing the Canadian dollar, dollar CAD continue to weaken. We're also looking for a move lower in here. We'll get to that, and obviously the euro's strengthening. Cables we mentioned up in here. And equities continue to go in and strengthen here. Bear with me. Let me just go in. Just going to go and move into that. Bear with me. Kind of move things around, so bear with me. Okay, and you can see here we just made a high up here in SPU's up here at 3170. Boy, we are still continuing to push up a little bit higher up into this 3175. But 3154 is a key level. I didn't even post anything of any significance on that, but that's a pretty key level here at 3154. We did get a pullback, and here we are reasserting ourselves. Let's take a look at this 3175. That was a pretty good little push here. 3175 is key. That is definitely going to be an area to watch. Look at 3175 here. And see how that looks stacks up on a fib. And that 3154 was also 78%. Holy smokes, it didn't even pull back very much. Maybe on this run up in here, we'll see where the market pairs back just a little bit. It'd be interesting to see how the volume shapes up in here because, boy, this is a pretty key area right here. And I thought 3154, which was a 78%, but you can see the market didn't back down that much, and we are still asserting ourselves. So this will be an interesting area right here between 3175 and 3193. Excuse me. So it'll be interesting to see what kind of a volume we get as we come into the States. Moving back into FX. You can see here the Peso still continuing to add. So you can see where that key move in volume, and they're actually starting to accelerate just a little bit higher than usual right now in the volume as it's moving higher. So you can see the advantage of using the, I tell people that even if you only trade the spot, it makes sense to incorporate the use of the futures. You can see what a difference that has made. Is we're starting to, we put in a pretty good volume spike. We're averaging what about, the average really was probably closer to about 125 contracts per minute. And actually some of those minutes were as low as about 50 or 35 contracts. And on this move down here, we spiked up to 500, a little over 500 contracts. And now we've already just now in the last minute and a half, we've punched up to a little over 200, then a little over 100. So you can see we're starting to move up higher here. But anyway, for those that are trading the Peso, So let's just go on and quickly move into the news. So the dollar ahead of services and sector data rising, stocks sink yen. Well, the dollar's not rising. It's actually going the other direction. The dollar held steady against most currencies on Monday as investors awaited data expected to show the U.S. services sector stopped contracting, which would further hit the hopia or lift the hopia for an economic recovery from the coronavirus pandemic. The euro moved in a narrow range before economic data from Germany and the Eurozone that are also forecast to show a sharp rebound in corporate activity and retail sales, which would ease concerns about the economic outlook. The yen fell against most major currencies as Asian share prices encouraged some risk-on trades. A steady rise of the coronavirus infections in the United States has discouraged some investors from taking big positions in the currency market, but most market participants remain focused on the growing likelihood that major economies will continue to recover. When it comes to the dollar yen, recovery expectations are supporting the dollar, but worries about the virus are capping the upside, said Masafumi Yamamoto. The markets are focused on other currency pairs like the Australian dollar, which is still in a clear uptrend against the US dollar due to the rising copper prices. The dollar edged up to 107.68 yen, Monday following a 0.3% gain last week. Market activity was subdued after the July 4th weekend holiday in the States. The euro rose a little over 0.3 to 12.87. Against the British pound, the common currency edged up to 90.35 pence. Sterling moved in a narrow range at 24.94. Against the Swissy, the dollar dipped to 94.32. The Institute for Supply Management's index for non-manufacturing activity due later on Monday is expected to rise to 50 in June from 45.4 the previous month, indicating activity stopped shrinking. The greenback has been locked in narrow trading ranges recently as concerns about a resurgence in U.S. coronavirus infections offset growing optimism about the economy. The euro will come into focus later in the day as Germany, the Eurozone's largest economy, is scheduled to release industrial orders for May. Retail sales for all the Eurozone will also be released later on Monday. Both indicators are forecast to recover strongly from large declines caused by the spread of the virus. However, the yen could fall quickly reverse given the uncertainty surrounding the virus. And let's see. The Aussie Dollar rose 0.3 to 69.62 on Monday, following the 1.2% gain last week, with the markets focused on the RBA policy meeting on Tuesday. Analysts expect the policy rate to stay at a quarter, and signs of Australia's economic downturn will not be as dire as first feared. Recent gains in the price of copper and other commodities that Australia exports, combined with more positive tone for the RBA, are likely to support the Aussie, analyst said. However, there are still some reasons to be cautious about the Aussie. On Monday, Australia's Victoria state said it will close its borders with the country's most populous new state of South Wales to contain a sudden spike in coronavirus infections. That may be causing a little bit of a pullback from here, even though look how strong we've gone. Made it up in here too. $69.82, and that's huge for finally, busting up above $69.31. And once again, I was looking to see if we did something on the morning bid. Actually, we did, so here we go. Just came out. So the bull bears continue the tug of war. City analysts summed up the situation on markets with their comment that bullish and bearish forces might cancel each other out, leaving global equities more or less at current levels in a 12-month time. The bearish forecast or bearish forces, one number during the numbers or the rounds in reopening affecting 40% of U.S. population have now been wound back. 15 states reported record increase in new COVID cases, which has now infected nearly 3 million Americans, according to Reuters. That's a poor prognosis for the U.S. economy and companies. Bank of America said on Friday, 7.1 billion was pulled out of equity funds over the past week, and bull and bear indicator was out of the buy territory for the first time since March, and Citi bottom-up earnings per share consensus. As for the bulls, markets are still trading on June glories, especially forced record U.S. Job numbers. Second, China and Europe appear to have escaped further COVID surges, so restrictions will be unwound further. German factory orders rebounded 10.4% in May after the previous month's slump. Service PMIs were generally revised higher on Friday from the flash estimates. Plus, central banks are still in the game. Citi reckons they will buy another $6 trillion in assets in the coming year. So today, world stocks have marched to 4-month highs. Chinese equities are at 5-year peaks, and European markets are higher. Emerging market equities have a race to the first straight session of the gains, and U.S. futures are up almost 2%. But yields on U.S. and German bonds are a touch higher, and gold has slipped. Japanese bonds are interesting. Yields overall lower today by 20 to 40-year borrowing costs have risen to their highest since March of 2019, having climbed since mid-June after the BOJ appeared unconcerned. As a reminder, the BOJ anchors yields on tenors of up to 10 years, so steeper bond curves is what intended with its yield curve central policy, so it will let its yields keep rising with an economy in recession. The Fed, which recently seemed to quash the idea of adopting the YCC in September, might be keeping an eye on it. In Europe, Commerzbank bypassed top brass, stepped down on Friday. Let me see, I don't think there's anything here beyond that. Okay, let's get this out of the way. And we'll just go and move in now to the analysis. Okay, so the euro is marking time between 112 and 113. You can see we're kind of pressing the upside a little bit higher now at 113 in today's trading. To spark some follow through, though, the pair needs a daily close of 1170 or above 1307. Immediate resistance is going to be 1292. You can see here we actually made it up to 1302. We supported 1195. Well, the key is going to be we need a daily close above 1307. You can see that 1307. So that'll be our resistance. If we can get a close above that, we can spark some short covering that, at least for a minimum, would take us up to 1370 immediately, with a potential if we can push higher. We need a daily close above 1307, but a key level is going to be this 1337 for right now, 1337. But 1307 was what we need to get above the daily. First things first, got to walk before you can run. But keep an eye on 1337. If we do spark a further move, it's 1307 that's going to be key. 1337. Matter of fact, I'll tell you what, let's just mark the 1337 because we did back away from this 1307, but if we punch beyond that 1307, that's the first target they're going to go to is 1337. Let's just make sure that's clear. As we noted here, 1170 is key on the low side, but obviously we're starting from a little bit stronger side today. We also had the longer weekend. So support's going to be right there at these lows. You can actually make the case right there. That would be key if we broke that. That would be support. You can basically know what your downside risk is, which is going to be essentially 1217. Let's go move into the cable. Okay, moving on to the cable. Cable, as with the euro, appears to be waiting in the wings for a break. The key will be a daily close above weekly resistance, which would be 26,202. Immediate resistance is going to be 25.72. Support will be 23.98. There we go. And support will be 23.98. Still relatively tight ranges right here with the cable. The key will be, like I said, if this thing gets above 26.02, it's going to take off because you can see the importance here of this weekly level right there. But we'd have to get above it. So as I mentioned, immediate resistance is going to be 25.72. Obviously, we're still pressing up here against 25 even right here, but you can, and the reason 25.72 because I think you're close enough where you could trip some stops. You could still be, I think Amanda's bearish. I think she mentioned on the chat she'd be selling up against, I think it's 25.10, I think it was. You could trip some stops, and this thing may run up in here and then still rotate lower, but once again, it's going to be 25.72. Obviously, we've got a little bit of resistance here, but if you look up in here, this was where the resistance, where I would show immediate resistance, 25.20, 25.22. But once again, some stops. You can run it up in here to 25.72 there, and it could still rotate back here. 26.02 would basically break it open to the bullish side. Let's go and move into the Aussie dollar. So the Aussie closed at 3 week highs. Resistance is a stone's throw away at 69.62. We actually made up to 69.82. Let me see, right there would be 60, basically 70 cents right there. At 69.62 with major at 70.27. Key support will be 68.64. Well, they did make it up to 69.82. This is a key level right there, and we're holding above it, 69.62. So you can see that it's key, but they're holding above it. So we have to be realistic and move beyond here, which is this level is at close, 69.97. I would put key support at 68.64. So if we do have the RBA coming up, if we see some significant move, or as we mentioned here with the SPOOs at 31.75, which really, like I said, we got 31.54 was key, which confluence with the 78%, and we did pull back, but it isn't of any real significance. So let's say that the market finally takes a tap here at 31.75. That could confluence here with this Aussie, maybe, taking a pause, not even pulling back, taking a pause. But where would be the risk? The risk would be here at 68.64. I mean, if you're looking at support for today, you'd be looking at 68.88. But look, that's not that far away. So your true risk level would be 68.64. Moving on to the Kiwi. So the Kiwi continues to press higher. Friday may see stops taken out. Resistance will be 66.51 with support at 64.40. And let me just double check if that was that's not correct. I don't know, it kind of ticks me off when it doesn't update that information. Bear with me. Okay, and it should be, and I'll replace this here. Frustrating that it didn't save that. Yeah. Kiwi, like its cousin, the Aussie, closed at 3-week highs. A resistance will be 65.56, followed by 65.94. Key support will be 64.48. So we just got past the 65.56. You can see it right there. Actually, that's 59. So we actually made it all the way up here to about 65.66. But we'll stick with this 65.56. With key support at 64.48. Moving on to the dollar CAD. So the dollar CAD closed the week off of its low, suggesting a move to at least 35.01. To start the week. Resistance will be 36.10 with secondary support at 34.60. So we'll go with 35.01 here. And resistance, that may seem a bit of a stretch here at 36.10. It is resistance, but as weak as we are right now, we're at 35.30. It's going to be right here for it now, 35.87. Let's go on to the peso. And we just covered that because we saw a bit of a, at least from an intraday perspective, a bit of a key turnaround here. As we came right into this support level, look at that. And look at that. And we saw that nice turnaround here in the peso. Bear with me. So we carry that key support, and you can see here with the peso. Look how low some of these contracts are trading. Basically, you can look at an average of about 50 contracts. As we came down to this low, look at this. We jump all the way up to 500 contracts here. Then we make just another high on very low volume. Look at that up in here. 78 contracts. And then look how much we've come off, and look how we've come back. It's not as significant here, but when you look at it on a 5-minute chart or 30-minute chart, then you see, we basically put in a very short-term bottom in here. And you can see the significance here when we look at it on a 30-minute. We've put in a hammer right there. And look, off of those lows, we've rallied 100 pips. Let's go back to the peso on the daily. So the peso closed the week on its lows with 4 consecutive losing days. Support comes in at 22.17 with a break leading to 21.85. Resistance will be 22.61. So you can see that 22.17 really worked out well. There it is. Let's move it down here. There. That's 22.17. And let's take a look at the 30-minute to see where we see resistance a little bit closer. Right there, it's 22.40. I'll just give it a little bit more room. 22, right there, 22.42. Let's go move into the dollar yen. So the dollar yen, after posting a false breakout and retreating 50 pips, has gone radio silent. Resistance will be 791 with support at 708. A close above or below the respective levels will trigger a solid follow through. We're just really quiet right now. I like the 708, the 798, maybe a little bit of a stretch, but we'll see. We can go, well, it takes them out on there on either side. So once again, 791 for upside resistance. On the downside, 708. And on to the cash dollar index. So the dollar index posted a small hammer on end of P day. The index appears to be set for a break. A close below 96.73 should trigger a strong follow through. Resistance will be 97.66. Well, we're a little bit, we actually made it, so it looks like the low is 96.82. So we'll use 96.73 as noted here for support. And currently we're at 96.93. 97.66 is quite the stretch. Right now, immediate resistance would come in right there, 97.25. I'll go with that. Let's keep it tight as we start the week. That would be the first immediate resistance line. And with that, we'll go into the cross rates. So the Kiwi yen keeps pushing ahead, closing at 3-week highs. Resistance to start the week will be 70.52. Looks like they just got a hair above that, and it pulled back just slightly. Will be 70.52 with major at 71.28. Beyond support will be 69.30. So let's go there. 70.52. It looks like the high for the day may have been, I think it's about 70.62 or so. So 70.52. And support will be 69.30. We'll move into the euro yen. So the euro yen came back a bit on Friday after posting a gravestone doji. You can see here on Thursday, Friday, we came back just a little bit. Immediate support will be 2038 with a daily close below 2002, triggering a challenge of 1942. Resistance will be 2151. You can see there's a resistance. We got up to 2164. So 2151 is the resistance. Really a nice turnaround considering what they're looking at on Thursday. So we kind of held our own on Friday, came back just a bit off of those lows after testing. Pushed higher, so it's 2151. We had that already previously. And support, immediate support would be 2038, which is quite a ways off now. It's actually going to be this close right here and support there, which would be 2075 for now, considering how well we did to come back. Let's go and move into the euro odd. This market is just dead. Euro odd continues to weaken with a potential move to major level 59.54. Immediate support will be 61.48. You can see that right there, 61.48. With resistance at 62.68. This market is just dead as a doornail. The Euro Kiwi closed at the lows of the week as Kiwi continues to strengthen. Immediate support will be 71.54. A daily close below 71.24 will target 69.83. Resistance will be 72.80. So it looked like they were going to press over. Right there, you can see there's that 71.54 coming in right there. It looks like they're trying to hold above that right now, but we'll stick with that. That's going to be key if we're able to press these stops a little bit further. 71.54. Resistance will be 72.80. And with that, we'll move into the Aussie yen. So the Aussie yen saw follow through in its upside break of the triangle, closing at its best levels in nearly 4 weeks. Resistance will be 74.97. I actually added a little bit of an extra number there. 74.97, which they did get above, but although we're below it right now. Two consecutive closes above that level will allow a challenge of 76.37, but today's resistance is at 74.97. And support will be 73.68. Right there. Basically, these highs coming in there. We did break above here and continued that move, but we're running out of gas right now at 74.97. See how the day goes further. And then moving on to the guppy. So the guppy closed at its best level of the week, challenging 34.32. You can see that right now. We actually bopped above it. Resistance above will be 35.29 with support at 33.20. We are struggling a little bit here. So we did make that push, But you can see here, right there, if it's going to make that move here, it's going to be 35.29. We supported 33.20. So if we do see this thing back down a bit here, right there, right there, it's actually going to be 35.26. Or I mean to say 33.26. And lastly, we'll wrap up with sterling odd. Sterling odd continues to languish. Major level 78.60 remains support with a close above resistance of 81.06 to generate some short coverage. So 78.60 for support. And for resistance, let's see if we can't get something a little bit closer. Oh, this is clear as a bell right there, which is going to be 80.05. And that's going to wrap it up for the cross rates. We'll take just a quick look at gold. You can see the peso continues to weaken. The peso itself, obviously dollar peso strengthened a bit here, but you can see that we hit that key level. We hit this on huge or pretty big volume, and then we made a new high on volume reverting back, and then since then we've continued to slide back. Obviously, dollar pesos continue to strengthen. Here's the gold market. I mean, we're just still sitting here around this upper set. I mean, we're still up in this upper region, but we're kind of sitting here relatively quiet here. Not a whole lot of action here. We did post in here after we took out the stops, a nice little hammer, but we haven't done much with it. Look at it, we've retreated back. It would be key for this area. We can expand this. See, we took out the stops. We came back, but we haven't done anything with it. We've retreated back, but it would be important for us to hold this area right there. Right there. You wouldn't want to get above below basically 1775 there. We can actually get rid of this one. So if you want to be a buyer, this is your risk level. You don't want this thing getting below here. And we'll go in and take a look where we are on equities. Oh, do you see? Oh, so we got the Centix index. That came in, it came in weaker, minus 18.2. Take a look at the euro. We did pair back a bit here in the euro. on that news. And we'll just kick one more quick jump back to equities. Just stalling a little bit up in here. But once again, they may want to try and tag this in the U.S. Open. And from there, we'll have to see where we are. But quite the run already, if you look at this. And like I said, we made it. This is actually the, which actually we had already tagged it before. If you look at it, that had been the 78%. We came up here, we failed. Here we are coming back again. It will be key to see how we react today, because this is a key level here. And that'll wrap it up, and then we'll go and get the bias chart in the posted. And thanks for joining us here on the European Crossover webinar.